Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 3rd of October. Starting off with the FTSE 100, we're somewhat in the middle of the range here, just bounced off or bear trapped off the 50-day moving average around 75.30. Obviously want to see an end-of-day close above that and then head back up towards the area of the 200-day moving average 76.40. The negatives here are the break of that uptrend line from August, but that was always rather steep, so maybe the market is actually trading like that, and we're actually in a rising trend channel. Otherwise, basically the RSI just below neutral 50, so I don't expect much on the downside, but at this stage it just seems to be rather range bound in a 100-point range. Moving on to the DAX, and maybe that'll give us more of a clue as to what's going on here. The old May support line there coming in again, and that's around 15,100, and we bounced off or above that, probably in a range between here and the broken December resistance line there around 15,600. But again, not much going on. The big plus, I suppose, is the way that even though we've had a large topping action there on the pattern on the DAX since the spring, we haven't actually had the big fall that you'd normally get. And you'd normally be expecting a move down to March support 14,400, but I suppose there's still time. It is October after all. Moving on to the Dow, and here just keeps on sinking over the recent past. We had that failure at the 200-day moving average, 33,800. Below that, there was the fear that we would have to test May support around 32,500. That looks as though we still have to. It looks as though we still have to factor that in. But we might get away with the lows that we've had so far, given the way that the RSI now is just below the 30 level. The last time we were below or near 30 in March, that started the rally. So hopefully we are near-ish the low after quite a pullback from the July peak. Moving on to Bitcoin, which is currently, in a way, the best of the bunch. The picture here that broke back above the 50-day moving average last week. We've broken that line of resistance there from July this week, and that's around the 27,500 level. What we really want is a clearance of 28,000, which was post late August resistance, to take us back up to 30,000 and beyond. If this is the low and we've actually found support, then we could be up to 34,000 as soon as the end of next month, or even sooner, given that that's the top of a broadening triangle from back in March. RSI at 60, which is a good place, but it is that 200-day, the pesky 200-day moving average at 28,000, which is the block on progress at the moment. The worst we can see at the moment is a return to the January uptrend line at 26,700, so hopefully that will also help this market. On to the stocks and Ascent Resources, where there seems to be some interest in terms of the Slovenian outcome. Bear trap gap reversal back above the old April support there around 2.9 pence. Looking for the shares to break the June resistance line at 3.1 and head up to 4.5 pence, perhaps as soon as the end of this month, if people start to get excited about prospects for the company after today's RNS. A less high-profile stock, but I thought I'd just look at it anyway. I was going to look at it yesterday, but chickened out. Here we've got a pretty good setup in the sense that it's a broadening triangle, and the broadening triangle there from this time last year, the top of the triangle there heading towards as high as £2.60. We're looking for that by the end of next month, maybe even by the end of this month, the way that we're going at the moment. And the upside value, while we hold above the 140 pence zone, which was the initial 2023 resistance. But obviously, I'm guessing that this is a bit of a liquid and widespread situation. On to C4X, which I thought I'd just look at because I haven't looked at it for a long time. Here we've got a bear trap island reversal, and the shares bouncing basically off the old, or just above the old, unfilled gap to the upside that we had back in May, so that suggests something's going on. I want to break the 200-day line there around 17.5 pence. If we can do that, the big picture target here, maybe for the end of next month, is up to 23 pence at that January resistance line projection. But a bear trap gap reversal, island reversal, means that that is looking quite strong technically. On to Dukemount, which has obviously been not one of the biggest success stories of the stock market of the recent past, but at least in terms of the charting, the 0.1 support area was identified. We tested that, or retested that last week, and it looks like we're in a rising trend channel from the beginning of 2022, top of that channel, up to 0.27, and we're looking for that while we hold above basically the 0.15 area. Maybe you could obviously say 0.12 the support, but hopefully by the end of next month we could be up towards the upper 20s there on Dukemount. Onto a stock which is not exactly very high profile, but here we have it, Esken, and here the possibility of a broadening triangle rebound. We bounced basically off that old gap back in July, 2.6 pence, and above that looking for the top of the triangle from June as high as 4.25 pence by the end of next month. That would be quite interesting if that actually managed to work. On to one of the biggest rises of the summer, Oxford Biodynamics, and the shares seem to be determined to break all the targets that we have set for them. The first one was 19, then we were looking at 29, then we're looking at 38, and above 38 we're looking for up to 50 pence, which is a December resistance line projection. So let's see if Oxford Biodynamics can finesse today's RNS, which has helped it go up yet higher. Onto Orcadian, and here we've got our V-shaped bull flag, which also looks like a mid-move consolidation ahead of a new leg to the upside up to 25 or 26 pence. Maybe by the end of this month, given that the placing's out the way and the shares remained above the placing price. It's normally a strong signal. So above 14, looking for 25 or 26 pence there. A bit of forensic charting coming up next with Panthera. And here you can see that we've got the shares bouncing at the top of that August gap for the third time now, or fourth time actually, strictly speaking. We bounced off it yesterday as well, 7 3/4. Above 7 3/4, looking for at least a retest of 11.5, and actually ideally back up to the highest level, or the resistance line projection from last year, as high as 13 or 14 pence by the end of next month. But the key here holding that 7 3/4 pence level. Stock which was a decent charting candidate back in the summer, back in August, and also back at the beginning of the year is Renalytix. But the key here, after the two gaps that we've had higher over the start of this week, is that we get back above 73.5 pence on an end of day close basis. If we can do that after the bear trap that we've had at the turn of the week, then we're looking for a return to as high as £1.40 by the end of the year. So a bit of a punchy call there, but the key here is to get back into that 73 to 140 plus range. On to TAP Global, which came up with a stonking RNS yesterday, going into the United States of America. Maybe people didn't understand that it was actually the United States of America, not a different place. But here we've gapped up yesterday. Just need to break that line of resistance around 2.4 pence. Above 2.4, we're looking for 3.3 pence by the end of next month. But obviously we want to stay above the recent support around the 2.1 pence level in the meantime. On to one of the best calls of the last few days, largely because it worked. Valerix, here we had an initial target which seemed rather ambitious, up to 10 pence by the end of, I presume it was next month, but we managed to do it by the end of this week. And the next target, while we're above 10 pence, is up to 17 pence, which is the top of that broadening triangle from back in December. Ideally, we stay above the 200-day line at 9 pence, even though obviously we'd like to see the shares remain above former resistance at 10 pence, but above 10 looking for 17 in the short term. Interesting setup here at Zoo Digital, where it looks as though the shares have overshot below the 30 pence level. Very strong candle from 30 to 40 pence last week, and the shares staying at the closing level or above the closing level. So that does suggest that we're going to fill the gap up to at least the 52 pence level, and maybe after that overshoot can head higher than that. So the best case at the moment would be a move back up to the 50-day moving average at 60p, but let's just go for 52 at the moment while we're above 40 pence. Finishing off with another big winner from the weekend, Zanaga. Here, the initial target here was after the unfilled gap to the upside. Actually, I looked at the stock over the weekend when it was there, so I suppose it was around 5.5 pence, something like that. The initial target up to 8 3/4 and above 8 3/4, looking for the shares to fill that gap down from June as high as 12 1/4 by the end of this month. So a great turnaround there. Hopefully this time the shares will go up and stay up, as opposed to the performance that we had back in June. That's it from me today. More updates tomorrow.